What's up, world? Michael EJ here, coming to you with another video in the field of finance, business, and life. Today I got a couple of more stock picks for you. Actually, 3 momentum picks that are in defensive industries. As in, even with all the chaos in the market that's going on right now, these stocks should hold up. Now, the reason why I'm focusing on certain industries that, like I mentioned before, the economy is kind of turning. There's more negative signs than positive signs. Now, this might last for a while. It's not going to hit a recession anytime soon. But market drawdowns, bear markets, and the economy is not always connected. And when there's too many signs that things might turn around in the market and go negative, you better pay attention. So with that, I wanted to pitch a couple of momentum stocks, since I am a big fan of momentum, and really actually talk about them in certain industries. Now, when you think of momentum, high-flying stocks, you usually think of technology, maybe healthcare, could be another sector or industry. And instead, I'm going to point your attention to certain industries that typically do well in bad times. One is materials, and the other actually has to do a little bit more of what's going on with politics. But we're going to go 2 picks with materials, certain sector. One's actually in defense, and that's mainly because of all the things that might happen with North Korea. And all 3 of these stocks are doing pretty well year to date, especially over the past month or so. So with that, let's get started. Now, I actually have these picks laid out in terms of confidence for me. Now, I'll go with least confident first, and once I get to explaining why I like these stocks, you'll understand why. So first pick, Alcoa. Now, Alcoa is essentially in the aluminum business, raw materials at its core. And the reason I picked them is commodities actually do pretty well, or commodity-related stocks do pretty well in times of crisis, when things are a little bit rocky. Mainly because they're really connected to inflation. They're like inflation hedges. And if you pick the right commodity or pick the right stock, you'll benefit from that inflation hedge, even when the market's tanking. Now, Alcoa is, like I mentioned before, in the aluminum business, and aluminum's actually had a pretty high rise this year, and a lot of it has to do with what's going on in China. So in China, they have like a focus on infrastructure, and the government kind of wanted to really increase demand and reasonably cut down on supply. Well, not increase supply as much as they're increasing demand. So if you know basic economics, demand goes up, supply stays stagnant, price will follow. And that's essentially the run that's been going on with aluminum prices going forward. And I mean, Alcoa has benefited from it greatly. But the reason I have the least confidence in it is simply that it looks to me that Alcoa, although fundamentals are improving, things don't look that bad for them. There's good fundamental growth rate there, good return on invested capital increasing. It's really all connected to what's going on with aluminum pricing. I mean, it's really it's better to look at what's going on with the aluminum price than look at the stock individually. Look at the aluminum price, I almost can guarantee you the stock will move in proportion. Now, with that said, Alcoa, in my opinion, even with all the run-up, is fairly valued and could potentially go up even more. So this is definitely a high-risk, high-reward type of situation. Next, we have FOE, the Faro Corporation. Now, I need to read exactly what they do, but I mean, they're mainly in specialty products. And when I say that, it's mainly products for coating glass, metal, and other substrates for multiple industries and applications. Now, they are connected to basic metals and materials, but they're not 100% in it. Also, they are what I would consider a niche play. I mean, they're in a niche industry. They're almost by themselves, have really good returns on invested capital that are increasing, not by a lot, but they're increasing. And I have a lot more confidence in that they're not just dependent on just one commodity price or 2 commodity prices. They're more so, you see it more from a company specific reason why this stock's going up, which I like, which is a lot more dependable, especially since their fundamentals are improving. But with that said, Ferro's actually, in my opinion, overvalued. I mean, you can make a case, not drastically overvalued, but overvalued nonetheless. So if you're worried about the valuation, yes, it's a safer pick, but you also might not get as high of return. I mean, my goal is always to go for double-digit returns with these momentum picks in a short amount of time. With Alcoa, I know pretty quickly if that's going to happen or not. With Ferro, I'm not so sure. It might be a while. We'll have to wait and see. Now, the reason I like the third one, different sector, by the way, in the defense sector, not only is it relevant to what's going on in the political environment today, but it, in my opinion, has the best asymmetric opportunity, as it is fairly valued, and I can see double-digit returns coming pretty easily. Like, I'm not going to say guaranteed, but I'll say the probability is high. And that is AJRD, Aerojet Holdings. And what they do is provide technology solutions for defense and aerospace industries. They are connected to mainly the space industry, things with shuttles and with planes, defense. I mean, they work with the DoD, they're in it. And they supply a lot to them and supply to like the Lockheed Martins in the world. They're not directly competing against them, they supply to them. Very important distinction, because if they were directly competing, I wouldn't be for it. But again, kind of work, niche, provide solutions, don't really compete with the big boys. One scary thing, the scariest thing about them actually is that they kind of have a very tight customer base, kind of concentrated. I believe the top 5 customers supply at least half, maybe close to 80-90% of the revenue. But take that out of the equation, this is a pretty good pick. I believe it's fairly valued, return on capital is coming, free cash flow is increasing, good fundamentals, well, borderline great fundamentals, and I think they're fairly valued. Which, by the way, when you're going in the momentum route and you're trying to incorporate valuation to the mix, keep in mind that 9 times out of 10, stocks are going to be overvalued. Like what you see with Ferro is actually more typical. It just bound to happen. I mean, you're picking a stock that's done great up to this point. So you can't expect to have completely undervalued companies here. But in Aerojet's case, I see it fairly valued, which to me is the best of both worlds. Because remember, returns come from fundamentals and sentiment. Fundamentals are high, and it justifies the valuation just enough for I can believe sentiment can increase even more. So that is my choices for today, and that's what I have for you today. Look at Alcoa, pay attention to the aluminum price, not the stock itself, the aluminum price. You have Ferro, not directly connected to materials, but they play a role. They get supplies from and they supply to, but they're kind of overvalued. And Aerojet Holdings, which is in the defense sector, defense industry, working with the DoD in these sorts, very important for what's going on politically, fairly valued, and I think has the most room to run. That's all I have for you today. Remember, this is just the beginning, trying to take a different spin on what's going on in the market, differentiated stock picks, differentiated views about finance, business, and life. So until the next time, make sure to subscribe, get these 3 stocks, and I'll see you later. Peace.